Good evening, ladies and gentlemen. This is Clueless A Trading Frank. It's approximately 8:17 p.m. on a lovely waterfront, New Jersey, New York City waterfront weather, for a better choice of words. It is 8:17 p.m. on December 20th, 2018. Joyous Christmas is just a couple of days away, and the end of the year, New Year's Eve festivities. For people who like to be very festive on New Year's, I normally just lie around and with the family and with my dogs and cats and my wife and my son. If my son's going to be around, and watch the festivities in Times Square on TV. So that's the way it is when you are only 2 miles away on the water across from Times Square. But saying all that, this is a very important, critical, strategic webinar on markets, on stocks, and the overall condition of on overall trading conditions that we're going through. Session will be recorded, uploaded to the Clueless A Trading YouTube channel. As you know, you can review it at any given time. I know it's a Wednesday evening in the midst of this holiday season, and I have my good friend Mike here, Badger, and anyone else who comes in, you're more than welcome. On that note, let us begin. Oh, full disclosure, this is purely for financial education, not for any solicitation or advice. Just bear with me one quick second. Okay, so one of the key things, as you know, my service, Clueless A Trading, is really designed to be a all-encompassing. Can't even say the word right. We like well-informed traders. Not just I just gave you an alert, you just make a buck on it, you made 40% of those options, and you made 100% of those options. You're excited. We like that old Sims ad, an educated consumer is educated client is the best consumer. Well, that's the same way we look at it. And the way I look at it is the more well-rounded you are, not that I want to make anyone a PhD, like I always say, in technical analysis on overall global finance and the dynamics of what the Federal Reserve does and things like that. But it is good to know why things are happening the way they're happening. And in between, you can play every single one of these charts and these candles and make yourself a good solid 20, 30, 40, 60, even 100% plus intraday. And some of you are doing it, and some of you are attempting to do it, and I congratulate all of you. It is difficult. This is a difficult market, and that's the reason if you looked at the article that I tweeted out there, I think the day before, on Stan Druckenmiller, one of George Soros's best fund managers. And I'm no fan of George Soros, but he is, after all, a multi-billionaire and doing some very right things about the market. But like he said, he actually stopped his hedge fund because he can't handle the algos. Well, Clueless A Trading is handling the algos, and we're handling them rather well. But every single candle on this chart is a 15-minute candle. So look what happens every single 15 minutes. When it's happening, it's incomplete. It's like a matrix, but I do put the whole framework and I put the charts the way I draw it, my structure over it, so you know where you can go, where you can bounce from, and every 15 or 30 minutes, if you're an active trader, you can actually make some very decent money. We have all types of traders at Clueless A Trading. We have quick traders, we have the day traders, then we have the swing traders, and then we have the long-term guys who love my long-term forecasts on the markets, primarily via the S&P 500, and they stick to that plan. Like I said, it takes all kinds to make a market. It takes bulls, it takes bears. As you know, we do some fantastic overnight and intraday short trades. Case in point, after this whole debacle happened with the Fed, which we're going to go through today, I said, buy, close it late afternoon. I said, buy the SPY 250 puts, which went up close to 120%. So that's what we do. I'm not perfect. I'm simply a faster messenger of the markets than anyone else is out there. Okay? I'm not like some of those trading services out there, which I'm not going to name, for legal purposes, who basically tell you that you can take $500 and make it into $100,000 in 3 months. For that, you need very, very rapid movement and a one-way directional movement in the market, which has happened a few times. I've had traders have put testimonials how they put $500 and they'd made $50,000, but those are rare events. Now, I'd like to ask who Mr. King is, who just walked in. King, can you identify yourself, please?
Long-standing disciple, Frank. Long-standing disciple. It's Fabian.
Oh my God! You just made my holiday. I'm not gonna get tactically emotional, but boy, I was thinking about you. I know you got married. I don't want to get into your private life, so everyone knows about it because it's a recorded session. But listen, congratulations, and I know you were moving on, but you are the king. All right, let me continue. I'll talk to you tomorrow. You just made my evening. I mean that. Okay? Because in between my tough facade that my good friend Mike knows, I do have a soft heart somewhere in there. So
I know. So you're too much of a funny guy to not, my friend. Come on, you have a great personality. Come on.
Thank you, man. Listen, life is funny. If you don't have a good laugh, you're gonna die. Or you're gonna die quicker. Let's just put it this way.
I agree.
And the markets are very funny beings. They make us feel so weak. They make us feel so strong. They make us feel so excited. They make us feel so depressed. But you know what happens? Eventually, it's just about numbers. It's about patterns. It's about charts. It's never the end all. It's never the Armageddon. It's never the reaching the nirvana of like pure, joy. It's always in the middle. So that's life. But we have 3 great people, and my good friend MB just walked in, and King, I tell you, Fabian, man, good hearing your voice. Okay, so let me start on the technicals before we have our social drinking session here. Which I would love to meet every one of you one of these days, and we should have a Clueless 8 gathering, and so have a lot of fun. But we shall do that in the coming year. So on that note, let me get into a couple of things that I've been looking at and just go through it. So first and foremost, this is what's happening with the markets, and I pulled up Wikipedia and just pulled this out. Hold on, trying to move it to my other screen. Hold on, did I get it? There we go. Here it comes. Perfect. Put this bookmarks. Take the bookmarks bar away. So basically what's happening right now is this whole tantrum that the market goes through, which it went through way back a couple of years ago, 2-3 years ago, on the taper tantrum when we stopped the QE, quantitative easing, which everyone in the world criticized, but it worked. And now we are in the opposite version of it called the, second, let me get a different color, called the oops, I didn't have my writing pad out today. So called the my mouse is very sticky today. I don't know why. Okay, there we go. QT. So what's QT, guys? Because this is the essence of what's happening. So as long as we understand the environment that we're working in, we're going to be okay. So QT is basically quantitative tightening. The Federal Reserve is draining the swamp. That's what they're doing. They're draining the excess liquidity that they injected under Janet Yellen and Ben Bernanke, which worked very well at that time. It was needed. I was always supportive of it. And I'm also supportive of quantitative tightening. I'm just not supportive of the verbiage or the language and the way Fed Chairman Jay Powell is using the words. You know, it's very simple. You know, I've been around for a little bit more than half a century, so you can guess my age, right? Okay. I have more energy than a 20-year-old. Hopefully I look better than a 30-year-old. So bottom line is that he is a complete nerd. N-E-R-D. So when he talks, you ever had a drink with a complete, like, ever watch, what's that show on TV that my wife likes watching? The one about all the nerds and they're all like, you know, it's not, what's the one? You guys know the name. MB, you gotta know the name.
Big Bang Theory?
Yes.
Yeah, well, Big Bang Theory, right. That's one of the shows in between Criminal Minds and everything else. She loves and the SEAL Team. That's one of her favorite shows. Must be the good-looking guys. But the thing is that it's Jerome Powell. And by the way, this is not I'm not trying to be Jay Leno here or some late-night comedian, but Jerome Powell is a complete idiotic nerd. He knows what he's doing, but he does not understand the market. Okay? So it's just like many traders, a lot of members that we have, who suffer from analysis paralysis. They're always analyzing too much. They're not taking the trade. So what are they doing? They're missing out. So Jerome Powell is exactly that. He is too much of a analysis paralysis kind of guy. Now, is he going to doom the U.S. economy? Absolutely not. And I'll tell you why. Because back a couple of years ago, I remember on the first conference, press conference that Janet Yellen did, she said something, I don't remember the exact thing, and the markets just went nuts. Like, oh my God. Well, this guy can't speak for crap, like we say in New York, speak for shit. I'm sorry, I'll say it in New York, okay? So he's completely nerdy, and that one question that was asked yesterday, like, what is your approach to the QT or quantitative tightening? And you can read that here. It's basically draining the swamp, draining the water, all the billions and trillions of dollars, because our balance sheet on the Fed is somewhere in the trillions. Don't have the exact number in my head. Okay? They bought up all the mortgage-backed securities. They bought up all the treasuries that they needed in order to pump liquidity into the U.S. economy when it was needed. And she was thoroughly criticized for doing that, if you guys remember, for basically pushing so much money into the U.S. economy. Like I used to explain this to my son when he was in 8th grade, dropping him off at school. Now he's a junior in college, right? He used to be a master at like knowing what QE was. I think at some school thing, he explained QE and they were like, whoa! So I'm explaining QT, which is the opposite of QE. All right. So QT is basically what they're doing is the balance sheet is so big in the trillions of dollars that they bought all those bonds and help the rates stay lower. Now they started in October, I believe. They started QT. Well, they didn't officially start QT, but they're basically reducing the balance sheet. So quantitative easing is to stimulate the economy, and QT, what they're doing is to normalize the interest rates. Now, for a lot of people, well, for most Americans, they have no frigging idea what normalization means, what the 10-year bond is, and this and that. That's a deficiency of our educational system. You know, I've said that many times. And it's just, you know, so we explain it in simple ways. Interest rates are coming back to a normal level. When he talks about the neutral rate, we don't know exactly what the neutral rate is, but it simply means a rate which is above inflation. And it is slightly above inflation right now, depending on, you know, what it is. In fact, yeah, it is. So inflation is running, let's say, 2% plus. The rates have to be, overall interest rates in treasury yield on the 10-year and 30-year have to be above 2 to 3%. So we have a positive interest rate. Pure economics. Okay? Because inflation cannot surpass what your overall rates are. So the point is that QT drains the swamp. Now we are I'm trying to find the symbol to show this, but we are, okay, we are taking money out of the U.S. economy in the form of that this balance sheet that we have. We are no longer buying those bonds, the treasury bonds, the mortgage-backed MBS bonds, securities, and other types of securities that they were buying. Remember, when you buy something, you pay the seller dollars. So what they're doing is they're doing the reverse. Now they're selling it back. Okay, so they're selling it back into the U.S. markets, and it's a different function. I'll explain it at some point. They don't they're not paying on the interest rate and whatever the case may be. It's a little bit complicated. It's very interesting, but it's not tonight's topic. So bottom line, what they're doing is when they're buying, they are pushing money into the economy, which is QE. So now they're doing the opposite. They're reducing the balance sheet by not reinvesting back in those mortgage-backed securities, in the corporate securities, in the treasury bonds, and that means that they are basically selling it back into the economy. And if you sell it back, that means the private market, the private market is having to buy it. So they're now putting money back into the coffers of the Fed. It's reducing their balance sheet. I'm going to put BS. It doesn't mean bullshit. It means balance sheet. Okay? And that simply means that there is less, and this is what it comes down to, and this is why we have so much volatility. We have less dollars to play with. Not you and me. We're not the big kahunas to play with. Now, what does play mean? Play means, trade. So one of the things I heard on Bloomberg the other night is like if you want to sell, let's say, 100 billion, let's say you want to sell $100 million worth of Amazon. Okay, showing you example. And you're showing the offer to sell it. You might have 70 million bids that you're getting, or that that's basically you're trying to sell 100 million, but there's only 70 million worth of buyers out there looking to get it from you. All of a sudden, you're stuck with 30 million bucks in your pocket. You got to lower the price in order to attract the buyers. Does everyone understand a little bit of what I'm talking about? Yes? No? Can everyone
Yes, a little bit.
Okay. Bottom line is real simple. And in any market, I'll keep this, Jack, I'm glad you mentioned that. In any market, you need to have a buyer, what we call a counterparty, and a seller. Okay? So that's clear, right? So we have a buyer and a seller. So the seller's trying to sell, let's say, $1 million worth of goods, but there's only $60 million worth of buyers. You are stuck with 40 million in your book. You understand what I'm saying? You understand that part, everyone? Jack?
Yes.
Okay. So you're stuck with 40 million that you can't sell. So what do you got to do? So you're trying to sell $1 million, let's say at $10. You need to get out of that. But you're stuck with 40 million because there's only 60 million that the other counterparty will take at $10. because that's all the money he's got. Because remember, the way the global markets work, they play with borrowed money. See, we're the idiots which play with real cash. The fast money plays with leveraged money, borrowed money, just like the housing market. You put 10% down, you 20% down, and you get a $500,000 mortgage. So bottom line is, you stuck with the 40 million. So quick question. So what do you got to do to attract the buyer to buy that 40 million off your hand?
Lower the price.
Thank you. Thank you. Lower the price. So you lower the price from 10. Now I know who's the real trader here. Okay, so you lower the price from 10 to 8. The buyer immediately says, okay, I'll take it off your hand. All right? Now, all this is happening because the central banks are starting to do QT, which is happening underneath the surface. It's $50 billion a month. Okay? $50 billion a month. Because it's in the trillions, right? It's actually a good thing, but it's bad short term for the markets. That's the reason, because $50 billion a month are drained out of the U.S. economy, or more importantly, from the available capital for buyers to access. Okay? So all of a sudden, they're just like, okay, I'm not going to pay $10. I'll go ahead and pay $8 because that's the only money I got, or whatever, they want to do. So QT, and definitely look up the definition, Google it, is a way of draining the liquidity, the excess liquidity that's in the U.S. economy. It's the same thing as the hidden rates going higher. In other words, you're paying a higher cost for borrowing money. Does everyone understand that part? This is so important. This is so important. In between my charts and my exact tactical levels and stuff, one must understand why we are going through this intense volatility. 5, 6, 700,000 point swings, which are unheard of. But it's purely because of the fact that there is a liquidity shift. In other words, there is not enough capital to borrow for the big players who borrow money and trade overnight, sometimes a couple of days, sometimes just overnight in the Globex markets. And that's the reason why we have the best charts in the world, yet we go up $5 and then the next thing you know, they drop $10. As long as we understand that, we can be better traders and better investors. I always said, this ain't Grandpa's market. Well, Grandpa right now is turning in his grave saying, what the heck is going on? Well, what the heck is going on? I'm explaining to you. So basically what's happening is the hidden cost of capital, which everyone understands, we're all, working people. The hidden rates or the hidden cost of capital is shooting up in the overnight repo markets. I don't want to get into that. In other words, what the hedge funds need to borrow, how much they're charging them overnight, how much money is there to lend by the Fed is shrinking. So we are in the opposite of pushing money into the economy. We're sucking money out of the economy because we got to get rid of that huge debt that we have. Don't forget, eventually, if we don't do this, we're going to be completely broke. Completely broke as a nation. So bottom line is, the hidden rate is moving higher. The overall interest rate, the overall interest rate is fine. Chairman Powell basically said that he was going to, have 2 rate hikes. He's probably going to have no rate hikes. Okay? So the overall interest rate is fine. It's moving sideways and probably might even go down a little bit next year, which we don't want going down. That means that things are in really bad shape. So in simple English, before I get into the charts, the whole reason why we have so much volatility is because of quantitative tightening. Now, this is off Wikipedia. If you go to Investopedia, it'll explain it to you a little bit more. It is a little bit of a complicated subject, but very simply is this. QE that we went through under Janet Yellen, which initiated after the big Great Recession of 2008. It was heavily criticized. Who am I? I'm just a small player. I always supported it. I said, hey, it's not a political thing. It's an economic thing. Remember, it's all about economics. It's all about the economy. You know, the political stuff can only last for a while. You can only like one guy for a while, you know, and we like certain ideologies. We like certain people, and that's all fine and good. But if your pockets are empty, it's not going to do anything, right? So QE was pushing dollars into the U.S. economy. And right now, what's happening is, even though he's not raising rates in a tremendous way, in fact, this might be the last rate hike that we have seen for the next year. If the economy, you know, there's a lot of risk out there. We know that, right? Now we are going through QT, which is taking money out, the pool of money that's available for the big players to borrow and trade. Okay? And that's the reason why we're having so much volatility. That's it. Simplest way to explain it. Now, let's get into the charts. Now, the reason I explained this very clearly is because one of the things you have to do, and in life as well as in trading, is to adapt. We have to adapt to this new paradigm. This new paradigm is extremely profitable for tactical chart traders. It is extremely detrimental and fatal for emotional traders. Look, no one likes losing money. Every single thing that I do, every single day, and all of you know that, I try to help people. I do. The few dollars you pay to cover the cost of running the service and a little bit for my time is all going into, is minimal for the amount of information that I'm delivering and what I'm doing for you guys. I'm not in charity business. I'm not a welfare guy. Worked my butt out all my life. Proud to say I had great parents. Okay, great doctors they were, but they didn't pay for, they didn't say, okay, here's a check to go out there and buy the BMWs and the Ferraris and stuff like that. We had a good living, but they taught me the work ethic. Okay, so everything that I'm doing is I'm trying to help you guys. We have some members who dropped out. Natural. Freak out. They don't want to learn. They don't want to understand. Sorry. Go. I'm not here. I don't care if I have one member left. Because to me, if I can help one person understand the dynamics of the market and make some money on a reasonable, consistent basis, to me, that is success. You can't make everybody happy all the time. You know that. My good friend Donald, my New York boy, okay? Donald Trump. Does he make everyone happy? Is he a jerk at times? Total jerk. Do I know what what he's like in New York? Absolutely. Do I think that he's doing the right job? Absolutely. Do I think he's taking some wrong approaches on certain things? Absolutely. That's the reason, that's what friends do. They criticize people. You don't like something, you do what you need to do. So I'm not here to appease everybody. I'm here to do my job. You guys take it and run with it. So let's get into the technical, guys. And thank you for listening, the earlier part of it. So here we are. It's a mess. This QT, that one question that was asked by that one reporter. And I was hoping I was really hoping for once that the market would brush that off. And that reporter, I don't know what Financial Times or not, she asked it. I knew it was coming. Say, what's your approach on your quantitative trading? I mean, the quantitative tightening part, 50 billion. And he answers something like, well, according to our analysis, everything that we have seen, I'm going to stick to that on autopilot. Autopilot? I know you guys heard that from the news, but what does autopilot mean? That means you're not going to look at any data, because he's saying everything that he's going to do is going to be based on data dependent, which I think he will. But then when it comes to the fact that $50 billion worth of balance sheet reduction, federal balance sheet reduction, which is QT, taking money out of the U.S. economy, right? He says it's on autopilot. Why isn't that data dependent? And the other thing that I didn't like he didn't really concede that there is some real damage going on in the U.S. markets and in international markets because of the fact that everyone believes that the Fed's going to be really hard on raising interest rates, which, by the way, he didn't say he was going to be hard. Hold on one second. So without getting into the academics, that one word, autopilot, meaning that autopilot basically means I don't give a crap what's happening with the stock markets. I don't give a crap of what's happening with the U.S. economy. But primarily, I don't really give a crap about what's happening with the stock markets. I'm just going to keep on reducing the balance sheet by $50 billion a month, which is $600 billion a year. Okay. I might be wrong. It's not 50 billion. It could be 50 million. I doubt it. QT. That's actually what I call my wife, by the way. Not QT, but QT. Okay. Bear with me 1 second. I'm going to tell you guys that at the end of the session. So whatever the case may be, the market didn't like that. Because that means that's a hidden tightening and hidden rate increase, and next thing you know, this happened, and I was really hoping, fingers crossed, that then we had this big bounce off one of my lines, and then it just all went. Now there are other risks. There's a government shutdown risk, which ain't going to happen. There is one of the other big risks in the market is Brexit, which is a complete disaster the way it's setting up. Okay, the overall concept is good, but the way they're doing it is completely wrong. So Brexit, seriously, it's not a good thing for any financial market. And the China trade thing is going to work out. But in the meantime, companies are taking a big hit, and it's showing up on a couple of earnings that have come out. And so that's another risk. But aside from that, this is where we are. So at this point, let's talk about technicals. Bottom line is, I hate saying this, but if you are not following the charts, it's just not going to survive this market. Because there is no general swing direction. Their primary trend right now is down. But in between the downs, as all of you know, you get big moves. Big moves. You short something, you're like, okay, you short something here, for example, as it's falling, next thing you know, market's like up 300 points from there. There is an intrinsic value in the stock markets where things get cheap, just like anything else in life. The only difference is that with the stock market, the average investor out there, mom and pop, who is completely panicked right now, I can imagine what my old firm, Putnam Investments in Boston, and Fidelity next door, and Old Pioneer and Vanguard, they're all based out of Boston, Beantown, what they're going through. They're handling calls coming in from everywhere saying, take me out of that fund, put me in the money market account right now. So what choice do they have? At the end of each day, towards the close, they have to sell. And now a lot of people are in, huge amounts of investors are in exchange traded funds, ETFs, right? ETFs? You guys know that? ETFs. So this ETF selling that happens because ETFs can be sold. I remember when ETFs first came out, and I was like, I used to sell them big because they were the best things. You could sell them during the day, and you don't, like a mutual fund, it wasn't executed at the end of the day's price. So bottom line is, it won't let me go blue. So bottom line is ETFs can be traded intraday like a stock, exchange traded funds, which is nothing but a basket of stocks, right? The spider is an ETF. So if you get a lot of redemptions, then you're going to be selling a lot at the end of the day. Okay? So that's why you get the 2 to 3 p.m. heavy-duty volatility. With heavy-duty margin selling, remember, the big players don't play, they all play with borrowed money. All right? Small people like us, all of us included, we are all small. We're the pikers. All right? We play with cash on the options. And we own stocks. Sometimes, we use margin, but we're not margin up the hole. We're not doing the 2 to 10. We're not putting $20 down to borrow 100. Hedge funds do that. They have the ability to do that. Most margin that we can do in a day trading account is 4 to 1, right? If you have a day trading account of over 25,000, you can play with $100,000, which gives you a lot of flexibility to do a lot of stuff on a volatile market. So leverage simply means, fancy word, say you borrowed money. So if you borrowed money and things going the wrong way, you got to pay up a lot, so you sell quickly to cover your losses and your margin calls. Another reason for major volatility. Is it ever going to go away? No. But as QT or quantitative tightening is setting in, the amount of leverage or money that you can borrow, especially the hedge funds, is tightening. And that's the reason why we have so much intense volatility, which is mind-boggling to the average person. But for the Clueless A Trading member, they understand what they're going through. Is it unnerving? Does it give you stomach cramps? Do you feel great sometimes when you catch that trade and it goes up 300 points and you just made yourself 50, 60, 70% that many of you are doing? Very happy to see that. Absolutely. It's stomach churning what's going on in the markets. Can't run away from it. So here's my, as I go through the charts, here's my suggestion. Play small, play fast. You have the time to look at some screens, play fast. You don't have time to look at the screen, do not trade intraday. Pick on a couple of long-term player swings. I put a lot of them out. You know the names. The Tillerys, the Toll Brothers, the New Beverages, NBEV, and a bunch of other names. Sit on them. Let them go. They're not going to be up every day, but they're on the right primary direction higher. We'll be looking at a lot more stocks as we move along, as circumstances change, into things which are not directly correlated with China trade, with interest rates, and we're going to look at those things. I'm going to put those ideas up more. So you'll be seeing a lot more different names that are going to come up. Take advantage of them. So play small, play fast. If you're up 60, 70%, don't expect the moon to, for 100%, 200%. Just take it. Roll it the way it is. At one point, the market's going to get really cheap. And I'll show you what that point is. And the only way I can see it is through charts. Okay? This is the S&P 500, guys. And everyone with me so far, right? Like, I didn't mute anything or whatever, right? Can everyone hear me? Okay, good.
Yep.
Bear with me one sec. At one point, it's going to be the perfect moment. Absolutely perfect moment. And the only thing I can show that is on a technical basis. So on a technical basis, when it's a perfect moment, it's going to be right here. And I posted that already. It's a lower Bollinger, which is around 2351. We're at 2467. So that's about 100 and... Oops, sorry. So we are at 2467. And this is the perfect moment where you can literally put, I mean, I'm not going to say I'm not your broker or advisor, but honestly, you get the third mortgage on the house, or if you have no mortgage, get a frigging, get a refi and take some money and you put it in the market and you basically triple it over a couple of months, over a year. And you're like, hell yeah, I did it. Just the way it was that perfect moment back in 2009 where you could be a trillionaire if you put, like they say, you got to be most aggressive at the ultimate lows. I don't know what the ultimate lows are, but at least from this point, a short-term ultimate low, I can show you guys, which is coming within a month or 2 months. And if you do it the right way, you can name your first dog after me, okay? How about that? So 115 points times 7. I'm looking at the higher number, like another 805 points to the lower Bollinger. Okay, that little move here is 805 points on the lower on the Dow Jones Industrial Average. We are so used to 500, 600, 700 point moves. Who cares? Right now, we should be ready for like 800 point move in one day. Give it to me in one day. I want this market to fall to that point where we can sit somewhere and say, fine, from this point, we have at least a week that we can just sit there and just do that swing trade. You look, we're all in the same boat. Aren't you guys sick and tired of the fact that I'm showing such amazing charts, and every time I'm showing it, it's moving that way, but it gets chopped halfway up there? Or if I'm showing a move, it happens within 15, 20 minutes, and then boom, it's down. Volatility sucks. Companies, investment banks, certain investment banks on trading desks, or especially algo HFT shops, they make a lot of money of volatility. Some of them. Most of them can't even make money because they can't figure out what's happening in the markets. It's not, you hear some of these guys who come on TV and they say, volatility is good. We were in such a non-vol environment for so many years. Those guys, honestly speaking, should be taken in the back and slapped and strung upside down. Dead serious. Because what they're basically saying is, hurt the American consumer, hurt the American investor. So they have no faith in the U.S. financial markets. They have no faith in what the government is trying to do in the right way, the Trump administration is trying to do, and they lose complete faith in the U.S. economy. So volatility is good? Don't give me that garbage. Okay? If they're just talking their book to make a lot more money. Well, that's fine. But to spread lies like that, and that's the true essence of fake commentary, in my opinion. Okay? I'm not a conspiracy guy. You guys know me by now, all right? But when you hear certain Wall Street guys come out and say, oh yeah, volatility is really good for the markets, they are absolute, I won't even say it, they're bastards. All they're basically saying is, I'm going to steal your money. I'm going to have mom and pop, the average American investor who doesn't understand what's going on out there, the average trader out there who is not a clueless day trading member, I mean it, okay, not understand what's going on, and they will lose complete faith in the markets. And that person is going to make money because they love volatility. Because what does volatility mean? People panic, they sell faster, things going higher. They run with it, then they get slammed, and all those commissions are built in all the trades that you're doing. Does everyone understand that part? What I just explained?
Yes.
Believe me, capitalism. I know capitalism is not fair, but to outright say that volatility is good, when you hear that from some of the guys, you just want to string those guys out, man. I'm telling you right now. And I come from Wall Street, and I'm telling you straight, those guys are the worst type that you can ever hear when they say volatility is good. Some volatility is fine. So we get price discovery, means things get cheaper, we can buy it, we can trade it. Not this type of volatility we're going through. And you think this is all part of the quantitative tightening? No, that's part of the reason. A lot of it is hedge funds day trading like monsters, literally trampling over each other, and that's the reason why you get these type of price fluctuations. Like I said, keep it small, keep it fast, Close your accounts out if you need to. At the end of the day, start fresh the next day, and we move on. Certain things you want to hold on. Any day, NBEV can get bought out. Any day, Tillery in the middle of 800-point drop is up 12 bucks after hours. And in a market like this, still up 8 plus and closed up 12%. Those are big moves. Any day, New Beverage, which company I like, as you know, from $3, $4, sitting here around $6.60, went to almost $7, can get bought out for $12. It's a different movement. They had this one quick thing I'll mention to you guys. Anheuser-Busch, AnBev, put in billions of dollars in Tillery. They're going to make a non-alcoholic CBD beer. Who do you think is going to be the biggest consumer? Can somebody tell me? It's so huge, it's not even funny. Who's going to be the biggest consumer on the non-alcoholic beer with CBD cannabinoid, ingredient in it? Please, somebody step up and tell me this.
From college students?
The Muslim nations?
Thank you!
Wow.
Mike!
Excellent.
Thank you! Exactly! I even told my wife that. Look, I shouldn't say our boy, but our president, Donald Trump, is one of the most strategic politicians when it comes to dealing with Muslim nations. In my opinion, despite some of his erroneous comments, he's best buddies with the biggest Muslim nation of the world, the keeper of the holy sites, right? Saudi Arabia. He's gone to bat for them like no other president ever has. And believe me, they owe him. The guy's just strangled and chopped up one of their reporters in an embassy in Turkey. Like, how freaking stupid is that? Like, take him to a dark side or somewhere, somewhere in like Uzbekistan or somewhere, like in the middle of Turkey. And President Trump stood up for that guy. Those guys are hardcore guys. The Saudis. They're the ballers. They got big money. They know what they're doing. They're getting smarter. They drink like fish, by the way. If you've ever been to the Middle East, I've been to Dubai. It's an unbelievable place. And Abu Dhabi and stuff. And they all drink. It's behind closed doors. But you're right, Mike. It's so huge, it's not even funny. Every single Muslim guy who's like, oh, I'm not going to drink, but I'm going to shoot somebody else with the head, but I'm not going to drink, but, I'm not saying it to my mouth. I'm just saying it in a nice way, okay? But even a nice Muslim guy who's a practicing Muslim and, let's say a doctor here in the U.S., great Muslim surgeons, a lot of doctors in New York area, other places. Says, I don't drink. Fine. Now he's got a drink. Now what's he going to say? There's CBD in there, I won't drink? No. First thing is to look at this. It's not alcoholic. Absolutely. It's huge. So why wouldn't a company look at a company like New Beverage, which is in the forefront of creating CBD and all these, infused drinks and stuff? Why wouldn't somebody say, okay, I want to buy you guys? Think. So that's what I'm saying. Those are special situations. I think those can withstand the blows in the market, and we're good to go. I don't know. I mean, the charts look good. So let me get back to this here. So bottom line is, if we get to this lower Bollinger here at 23.45, somewhere in here, or this is the big uptrend line. This is what I look at. And you can literally drool over this. This is at 22.35. So if it's 22.35, I'm just giving you an idea how much we need to fall. This is not going to happen in one day. Believe me. It might not happen for a while. So we're at 24.67 and we go to 22.35. That's 232. Let me write this down. That's 232 S&P points. And this is if, like we say in New York, if the shit really hits the fan, or, whatever it is, 200, everything goes wrong. China thing doesn't go right, big time trade war, the 25% tariffs go into play in March. Brexit just explodes. Powell remains a complete nerd, like completely devoid of understanding what's happening in stock markets. Housing prices fall. So 235 points on the S&P 500, right? 235 points times 7. 1 second, that doesn't make any sense. It's that close?
1,400.
Oh my God! I mean, I'm serious now. I need to start drinking some of those CBD things. That's only 1,600 points. You're right. That's right. It's like 1,400, 1,600 points. I just multiply by, yeah. So we got another 1,645. Thanks, Jack, for correcting me. I'm thinking like 3,000 points, whatever. But 1,645 points from here to here before you get a monster rally. Remember, the bull market, and I'll say this very strongly also, you guys understand this. Bull market at this point technically is broken. But who the F cares? We're just trading ranges. We're trading levels. The bull market, they're saying, oh, the bull market is totally broken. Well, when the bull market was going on, 99% of the average investor or trader made no money because every time it went up, they said, oh my God, it's going up too much. So who the hell cares if the bull market's broken or not? So at this point, the overall multi-year from 2009 to 2018 bull market that is, if you look at this uptrend line, is still intact at this level. Personally, I don't care because my job is to pay the bills. My job is to make money every day or every week. So on that note, these are the levels of contact which would be big. This is where you put them. You want to put in the maximum aggressive amount of money. Now, just because it hits this doesn't mean it's going to stay here. Chances are that if it's another, this is a huge weekly candle. Chances are the pressure, the weight of another red candle will push the market down to 2144. Why is 2144 important? Because that was what, and I identified this for you guys last year, was back the big ascending triangle breakout on November 1st of 2016. 2 years ago. And what was important? November 1st, November 7th, President Trump winning the presidency. And that was the big Trump rally. So is it possible that the market, let me just put a bigger picture. Is it possible that the market completely reverses the entire Trump rally that began on November of 2016? Absolutely. Absolutely possible. The sooner it happens, within the next 2-3 months, the better off we'll be to have a counter trend rally that is going to make people, tactical traders and tactical members in our group, very, very rich. I mean, very, very rich. I'm not the type to say, oh, put in $500, you're going to make $1 million, like a lot of other services out there. But we get down here, you will get a tactical bounce of a magnitude like you have never seen. I called this rally. I didn't think it was going to be that big, but we went with it. We stayed with it. So that's it, guys. So that's your long-term picture, all right? So keep that on the back of your head. Want to keep more cash on the side than what you're trading with? Absolutely. At this juncture, you got to do it. Hold on. If you're playing with way too much money in this type of environment, it's dangerous. It's way too dangerous. And you guys know I'm an aggressive trader. but it's way too dangerous. Play small, take profits faster, get into diverse positions, different things. Even on a day like today, till the first part of the day, there were multiple green plays. Like MU, still, it was up like a buck and change. That's a lot for a $30 stock. Ideas that I put out there, like Ligand Pharmaceuticals, big biotech stuff, good things going on. Stock looks great for a $13, $15 move. Healthcare, and forget healthcare, biotech, specialized biotechs, the overall biotech side looks pretty damn good. I'm going to be putting up the IBB and the XBI charts tomorrow. Remember, they are not held hostage to the tariff war. The only thing that can be derail the biotech movement are the Democrats coming to power in January and take over the House. That if they go really nuts on drug pricing and especially innovative drugs, which really the companies that we look at, we're not looking at the Pfizers and the Mercks and stuff like that on the pricing front. We're looking at the companies which are changing the face of cancer, CAR T therapy, and all kinds of other different genome or gene therapy stuff. So I don't think the Democrats are going to go that far on that stuff, but those stocks I'm going to be showing a lot more. Just giving you an idea, because we need to change our strategy. The Apples, the Netflix looks pretty damn good, because honestly, Netflix is not held hostage to China either. So there are certain, niche ideas. When I put it out there, Apple, Apple is a great company, but it is held hostage to China. Tesla still held hostage to China, even though they're building the plant in China, but good trading stock. Facebook, well, it's a different story. Friggin' thing was up all day, even closed the day up. Unbelievable. Twitter, I don't trade anymore. Booking, crazy stock, not held hostage to China or trade deals, but got to play the exact specific ranges. Amazon gets slapped around, but I think it's still a huge winner. And we have traded that pretty successfully. Okay, one of the last things I'll talk to you guys is the wave 5 thing, right? So this is wave 1, 2, wave 3 is always the longest, the Elliott wave theory, wave 4, wave 5. Wave 5 generally measures the same as wave 1. So if that's the case, somewhere around the 244 range, which we got a double barrel move here, bullish engulfing, could be the bottom. Could be the bottom. Short-term tradable bottom. No one's calling for an ultimate bottom. We know what the ultimate bottoms are because I just showed you on the long-term charts. So if that's the case, then we could get a nice sizable bounce towards the 253 level, which would be sell, 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 Kramer style. Okay? That's a lot of money though. So be prepared for that. This is a 15-minute chart, but it is a possibility that we hit this wide downtrend channel. Remember, this is a very large downtrend channel. Very large, right? But if we move from where we are right now, from the 247 level to 253, you're talking 400 to 500 points on the Dow, and 6 points on your cheap SPY calls. Get ready for it. It can come from nowhere. 1, President Trump signing the deal. 2, some positive China news, because it is the trade negotiations are going well. Some suppression of the Brexit anxiety. The Italy bond debacle and the fight with the EU was actually resolved or suppressed, but no one really cared about it because the market was selling off. That was a big thing. That's great for the European markets. China is doing something which is big. They're getting hurt bad. So they are going to expand. They're going to do QE to a level that they did back in 2008, 2009. They're going to do a mini QE, quantitative easing, just the way our nerdy boy here is pulling money out of the economy through QT. China is going to go full blast, pedal to the metal, pushing lowering interest rates, capital reserve requirements on their banks, and pushing money into the economy. And believe me, China growth shows up even 0.1% higher on the next number. You see the positive effect it has on the global markets, including ours. So we have to keep an eye on Alibaba. Look at NetEase. The frigging things, it was green today, up $4. So the select names on the China side, primarily Baidu, Baba, NetEase, those are the ones that I trade at, would be something that you guys want to keep on your radar. Okay? Because China does not have any QT or quantitative tightening problems. All right? They're not raising interest rates. They might even lower interest rates. I know they are working on a plan to really boost their economy, which will go well hand in hand with the great negotiations that the Trump team is doing, in my opinion, with the Chinese delegation, who is supposed to going to be here in January. So basically, just trade the charts. I know it's quick. I know it's not that easy when you're busy with if you have a busy schedule during the day. But if you have time to look at the charts, it's not that hard to take. I don't care if you buy one contract at 2 and sell it at 3. That's $150 in 15 minutes you didn't have. All right? Or you buy 5 contracts for $1,000 and you sell it at 3. You just made $500 that you didn't have 15 minutes ago. I mean, think about it that way. I don't know if you guys were all born with a silver spoon in your mouth, but I wasn't. I came from a nice middle-class educated medical family, but I didn't have FU money lying around, okay? And if you do have FU money lying around, trade the market. And if you have smaller money lying around, trade the market. That's serious. All right? Because sitting around doing nothing is not going to do anything. Will you get hit on sudden moves down? Sure. But you can make a lot of it back up. All I know is one thing, guys. The market is so extremely oversold to a level that is unheard of. We are back on sentiment readings while there are positive divergences. Look at this. The crossover up is still intact on the ES daily, on the futures daily. Yet we are plummeting. When was the last time it was here? When the markets were at 2,635. We're at 2,479 and we're down at the same level. Look at this. Bear with me. That's called a positive divergence. Look, last time we were here, the market was at 2,640, 1,000 plus points higher. And we're down here and we're still doing the crossover up. So what gives? It's called capitulation panic selling. The real big boys are not doing the selling. The hedge funds are panicking. They're getting the margin calls. Retail traders are getting blown out. And leveraged loan type of trading outfits are getting taken out. So that's the reason why we still have a quadruple bottom in place. Yet the market is way down from there. We were at 2673, where the break-even level for the year is. We went to 2440, like I showed. So 2440 minus 2673 is a 233 points on the S&P multiplied by 7. I'm taking the higher number. That's 1,631 points lower on the Dow, on the Dow Jones. Yet the internals are exactly at the same level. What gives? Somewhere in here, very soon, there is going to be a face-ripping, blasting rally that is going to be sick. And we need to be prepared for it. We will never catch the exact bottoms or like time to show the exact bottom, but you got to be on that gravy train, which might last a couple of days, which might last a day, but it's going to happen. It's not going to be lasting a day. It'll last a couple of days. The actual reversal bounce. We just need to be very prepared for it. Small gets big on those type of things. Want you guys to share in that wealth. That's the reason I do these webinars. Any questions you guys want to ask me? Go ahead, come in the chat room. Anything that I can see, I can feel. Like good old Donald said, feel the market. I loved it. That was such a New York term. That was such a New York term. I just loved it. When he tweeted out to Mr. Nerdy Powell, feel the market. Gotta feel the market, guys. Gotta feel the market. It is dark out there. And there's a lot of money, especially the big boys are losing a lot of money. Trade the charts. There are no guarantees that every 15 minutes I'm going to be right. But if we see those substantial type of bottoms, then you can go on a multi-day swings. In the meantime, do some small trades intraday. This is a weekly chart. This is a daily chart. Daily? Or is this a weekly? That's the daily. That was actually a weekly chart. Hold on one second. I look at this weekly chart and I say, what the heck's going on? Because I don't see an exact bottom. I mean, I see a bottom at a level where I could say here at 24.23. But maybe it doesn't get there. Like I said, a watch pot doesn't boil, right? So maybe it doesn't get there. We almost got there. Maybe today was the bottom. I don't know. This to me is a good tradable bottom right here at 24.20. So we turn from here. We need these little internals, the heartbeats of the market, to turn. And once it turns, I don't care what happens during the day, we stay long for a couple of days. Any quick questions, please? Anyone? Jack, King, MB, Sarm?
I'm good.
All right. I hope all of you got something out of what I was trying to explain. Listen, real estate trading is about no BS. We like to show it the way we see it and also put in my 2 cents about what I understand. This is a tough environment to trade. No question about it. But even when the markets were going higher, it was still a tough environment to trade. Believe me, it was. Because every single time the markets gapped open, you're like, oh, God, sold too early, didn't get in. And it kept on going. So now we have this unbelievably structured volatility. Everybody's saying it's all over. So let's stick with the charts. Let's do what we need to do. Scalp those 30, 40, 50%. Small gets big. Trade small for now. When that ultimate, what should I say, levels get, that's the VIX, by the way. Okay, and keep showing that. Extremely oversold, and just want to show this, and starting to turn. This VIX even turns a little bit like this from this oversold conditions. This is a crossover down. It's going to come down. Markets will be up 400. Blink of an eye. Blink of an eye. Markets will be up. Dow Jones will be up 400 points on the VIX, just pulling back 1 or 2 points. And this baby just coming down a little bit. If this is the true high on the VIX, like the way it was back in October of last year, October of this year, then you're going to get a 1,000-point rally. Try to catch a good portion of that. That's all. All right, guys. Have a great evening. I really appreciate your attendance. We're all in this boat together. Let's make it happen. Have a great evening. God bless you all.
Thanks, Frank.
And if I can all of you to talk to you guys before Christmas, I'll certainly be doing the Sunday webinar. But Merry Christmas. We love our nation. We respect the flag. And all we're doing is just trying to make a good day's living the straight way. Thank you. God bless you all.